Hello traders, the title of the video is how to avoid a double top chart pattern mistakes. That's it. The time has come to tell traders exactly how to avoid the double top chart pattern mistakes. It's very simple. If you want to avoid the double top chart pattern trading mistakes, you want to use a ray of trend lines. So you see here I have an array of trend line, many trend line coming from one point. Ray of trend line will help you to avoid the double top, okay, a chart pattern mistakes. So what is happening? So you see here, there was this top here. That's the first top, isn't it? All right. So what this top is telling us, because the price was going now for many years, as it reaches this top, all right, people shut it down. So it's telling us this is a distribution zone. Do we need level 2? No, we don't need level 2. The price will tell you. So they are selling in this zone. That's what the price is telling us. No question about it. It's there. And no one can deny it. Are you denying it? All right, please let us know in the comment section. All right. So we know that that zone, that price zone, is a distribution zone. People are selling there. So it's not a good place to buy. If we want to buy in that zone, we will prefer the price to go above it and to find a support, which means a conversion of a bearish zone into a bullish zone. That will be the only time that we will consider to buy in that zone. But if the price in the future again is revisiting the same zone, what will be the first thing coming to our mind is to sell, because they showed it there before, all right? And the first thing that they would try to do in the same zone, they would sell. The good news is that technical traders, all right, are like scroungers sometimes. Why? Because, you see, they are not fundamental traders. They are using chart analysis, technical indicators, area wave, Fibonacci, and so on. But sometimes they will eat in the plate of the fundamental trader. This is one example here. So fundamental traders make their decision, do their due diligence, okay, hitting their head to the wall to find out whether this stock they should sell or buy. And they say, all right, hedge fund, institutional investment, they say, oh, this is a good place to sell it. So they have a good reason why they sold it here. Otherwise, the price will not go down. So because they have a valid reason why they sold it, the price went down. So there was a good or valid reason why they sold it here. So where should we sell? We should sell in a zone where there were a good reason to sell. The financial instrument doesn't mean that we just jump on it and sell it there because they sold it before. But if we see a weakness of the price action in that zone, well, common sector is broken, price form a lower high, all right, and so on and so on, we always receive, okay, we see a bearish trading setup, bearish chart pattern, and then we use a top-down trading method, and a bearish trading signal is fired. Well, we don't need another permission before we will sell it. We'll sell it. And here we have the price revisiting the same zone, forming a double top. Can you see that they are selling there now? That's the first reaction. So in fact, I'll color that one into orange because that's the first reaction. We can't color it yet into red. So because it's here, as the price came to the same zone, you can see the red line at 4578. The financial instrument that we are using is called Pfizer. Before I used to call this stock Pfizer. So they say, no, not Pfizer, just Pfizer, not Pfizer. All right, Pfizer. Epic PFE. It's an American stock, all right, belonging to the healthcare sector, all right, Pfizer. PFE, Papa Foxtrot Eco. I'm back to TC2000. I've been using a TradingView recently. It was very nice to use TradingView, by the way. Okay, so here we are, TC2000. The first reaction you see here, did it sell? So I'm on the monthly chart. How many months? So month for December, they sold it. Month for this January, they are selling again in the same zone. So those that were selling here probably were selling here. So the price has formed now. If it stays like this, all right, if it doesn't go above that level of 4578, that will constitute a double top. Yes or no? So how do you avoid a double top trading mistake? Draw a ray of trend line. So the price action that is bringing the price to the second top, look for, okay, connect the low, every low, just connect them. So connect, just roughly, see here, this high here, and this high roughly there. Just draw a ray of trend line. Don't be too strict. Don't try to be accurate. Just draw them. Connect, okay. Key point, just connect them. Just see, I just draw them roughly. Okay, many of them. Connect them as many as you can. You can connect the closing price here and to that close, that opening price there. Those are key points. Just connect them. Just connect them. You can connect a low and a low. You can connect a high and a high. You can connect a high and a low, and so on. Any combination, just draw a ray of trend line. But if you can't see, suppose the price just go in a straight line, and you only draw true lines. Suppose you see, George, I can't see many. I only see two. Okay, that's a very good question. Suppose you see only two, because you can't see many. You only manage to draw two. Okay, project. So you see the angle like this, you have to do it vertically. This is very important. I will say it one more time, because if you do it another way, it's wrong. Project it vertically. So if you see only two lines, you draw this one and this one. Project it like this vertically. And then from here, from this point, you draw the line from the same point. You see all coming from the same point to connect to this low here. Again, you can do it again down. All right? Just vertically like this. All right? So draw a ray of trend line that will help you to avoid the double top chart pattern mistakes. So generally speaking, because people see like this, they say he's going to go down for many months, and sometimes the price will just go down a bit and then run away. But if the price you say is going to go down, it means that you are saying that the price will be looking for a better support level. By drawing those array of trend line like I did here, we pull back. Will you be selling here? No, you know that there's a support there. You prefer to break below that one and retest it before you sell it down to the next one. It come down here, will you sell there? No. You prefer to break below that next trend line and retest it before you sell it down. And sometimes that will be very, 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 very helpful for those that are trading the double top. GSTW24 traders. Okay. Should we talk about it in public? I will say it. All right. There's another way to trade a double top, okay, more accurately. All right. So now Pfizer stock is pulling back. See, so first reaction will be near this one. Be patient. Is there a hot spot trading zone? What is a hot spot trading zone? The intersection of any of those trend lines and another key level there. You see, the price change direction here. This point here, change direction here, pull back, it's a key level. So in the month of December, it's not by mistake that traders quickly stop it there. So they sold it down. They say, oh, George, there's a support there, this one. So as it's going down here, it's going there. The support at 4052, but it's also a hot spot zone because it's intersection between that trend line, that green trend line, and the horizontal line. It's another hot spot zone. You see the orange line here, and that trend line there. It's another one here, hot spot zone. Pay attention to them. So by drawing the ray of trend line, that will help you to avoid double top trading mistakes. Another simple way to avoid double top trading mistakes, so if the price goes blah, 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 minimum, like here, you want a common set trend line to be broken. The trend line that we draw along the trend line. And you are paying attention to the support level because you expect it to go down. The best scenario will be break below, retest, turn around. Break below, retest, turn around. Alright? You may argue that this was a double top here. Yes, it was. You see, it's a double top. But you can see that the price did not go down in a straight line. You see, come down, went up, come down, went up, come down, went up. Yes or no? That's what the price went down, went up. What the price doing, all the price was doing, it was retesting key level. Break below, retest down, retest down. That's what the price doing all the time. See this one? It's a support level. Double top was formed, look for, break below, retest. Come on, central line is broken. Implement a different time frame trading method. So this will conclude our discussion today about how to avoid a double top chart pattern mistake. To summarize the video, when we see a double top, one can draw a ray of a trend line, okay, from the price action that brought the price to form the second top. You want to pay attention to those trend lines, and most importantly, the hotspot trading zone. You want to sell, you want the price to convert a support level into a resistance level by breaking below a key level and retesting it, or breaking below a trend line and retesting it, taking it one step at a time. Sometimes a double top may form, the price will go down partially. People think, oh, Joe, you say it's a double top. Yeah, it go down all the way here, only to turn around from this point onward and run up. You say, oh, George, it's not double top. Yeah, this one was beautiful here, went down for many, many years. All right. If this video has been truly useful to you, please let us know by giving us your beautiful thumbs up, please. However, if you think, George, I'm not impressed, it's the same story, blah, 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 George, you need to improve, mark it down. However, if you think it's an essential tutorial that can help other chart pattern traders out there, especially those that are trading the double top chart pattern, feel free to share with your friend on Google+, on Twitter, and Facebook. Traders that are sharing our video, I want to say to you a very big thank you. All right, because you are helping us. Our YouTube channel is 24 Stock Trader, Digit 2, Digit 4 Stock Trader YouTube channel. Subscribe to them and be sure to click on the notification bell, as they say, ring the bell. So anytime we are about to post, YouTube premiere video, you will be the first person to be notified. Sometimes I post video first on my Facebook page. My Facebook page is stochastic-MACD. Until the next time, enjoy yourself and be very happy. We are the GSTW24 traders talking about how to avoid double top chart pattern mistake. If you want to learn more how to master the double top chart pattern, go to www.stochastic-MACD. Look for the web page that we title double top chart pattern. There are other chart patterns talking about cup and handle chart pattern, head and shoulder chart pattern. You may check them out at stochastic-MACD.com. If you want to learn more about Fibonacci training, Pitchfork 2 training, fractal pattern, market geometry, gap trading, scalping, go to www.dayprotraders.com. However, if you want to learn to forecast the financial market using the Elliott wave principle, go to www.24elliottwaves.com. The links are in the description section. Until the next time, enjoy yourself and be very happy. Happy trading to you all, and I will speak to you soon. Thank you for watching.